Welcome to the Smarter Trading Podcast. If you want to sharpen your trading skills or become a more savvy investor, then you're in the right place. Every week, we sit down with professional traders who are ready to share practical insights on what it takes to succeed in modern-day markets. Smarter Trading, the show to watch to trade smarter.
Evan Medeiros is the founder and CEO of The Trade Risk. All opinions expressed by guests are solely their own opinions and do not reflect the opinion of Evan or The Trade Risk. This podcast is for informational purposes only and should not be relied upon as the basis for investment decisions. Evan and guests may maintain positions in securities discussed in this podcast.
This episode of Smarter Trading is sponsored by Investors Business Daily. Some people say it's not possible to time the market, but William O'Neill and the experts at IBD created a system that helps you stay on the right side of the action, aggressive in uptrends and protected in downtrends. IBD Digital members get daily updates on the current market conditions so they always know when to take action. Join IBD Digital today and be in the know. Podcast listeners can get their first 2 months for only $20 by going to investors.com/Evan. That's investors.com/EVAN. Now, let's hear about today's guest. Our guest today is Kunal Desai. Kunal is an American stock trader and CEO of Bulls on Wall Street, an online trading academy. He began trading in 1999 and has spent most of his career perfecting momentum-based day trading strategies. In this episode, we talk all about what it takes to day trade stocks. Kunal shares lessons he learned from his early days, the importance of finding mentors, and why being accountable is a winning trait for a trader. He then dives into his trading philosophy, stressing the importance of combining fundamental catalysts with technicals and how he prefers to focus on the macro health of the market for his swing trading. During the last 20 minutes, we switch gears and dive into cryptocurrency, where Kunal shares tips and strategies for trading digital assets. Kunal brings a lot of energy and positivity to this episode, and if you're an active tactical trader, this one's for you. Please enjoy this episode with Kunal Desai. You know, one of the things that I feel like I just got to hand to you right off the bat is that, I tune into your live streams and you are always having so much damn fun in those things. Like, it just looks like you're having a ball when you're doing your live streams or you're talking on video. And I'm guessing it's because you are. So you must love it, and it shows. So what's your secret to that?
Well, I mean, in reality, this is, if you can pull it off, I mean, I have the best job in the world. I have 3 sisters that are they've worked their butts off to make money. 2 of them are doctors. They do real work.
Yeah.
What I'm doing is I'm having fun. I spend a lot of time getting this going, but for me, trading is fun anyways.
Yeah.
But in reality, if we're really being honest with ourselves, I'm not doing anything special. My dad, who's a pretty blue collar guy, an engineer, immigrant, that man worked his butt off to send kids to school, mortgage, all this kind of stuff. Even he has fun with what I do. He sees this and he's like, damn, boy, times have changed, right?
Yeah.
But that's kind of how a lot of this stuff happens, right? One generation sets it up for another generation. That's an immigrant story, of course. So he's having a lot of fun with it, but you can even see it. He's because I remember the days him coming home 6, 7 o'clock, then you gotta he's teaching me how to play baseball and okay, this is your homework and this and that. And we get have dinner, right? And it's he doesn't even have a minute to himself till everybody's asleep. And that's a whole different game than what I'm doing, right? By the time I'm 40 years old, by the time my dad was 40 years old, I was basically already about to get into high school.
Right.
It's a whole different game. That's how the world changes a little bit. So yeah, I'm having fun with it because I don't take this thing too seriously, and it is the best job on earth if you can pull it off.
Well, I appreciate it. I love the perspective, and you're fun to just tune in and listen to. So kudos to you for educating and entertaining. It's hard to do both, and I think you have a good balance there. So So before we get into, your kind of background and, everything that you're up to, I thought it would be fun
Yeah.
to kind of start with something I've heard you riff on before. And, ultimately people are going to listen to us and they're going to come away with some cool new tactics that, you're going to lay on them in this podcast. And I've heard you talk about sort of putting in the work to become the trader you want to be. In other words, there's education, the trade setups, the technical stuff, but then there's the actual work that you need to put in, the reps, the screen time. So tell me like what you think about those two things, how you break up the educational knowledge and then the actual screen time that you have to put in.
So you have your theoretical knowledge, and you need that though. Like a lot of people down on college these days, right? Because you have like so many billionaires that didn't go to school. But like education is right important. Like learning how to learn is important, I think. It's not necessarily like going to school and learning, but learning how to learn is important. Because there is a proper way to learn, and it's not the same for everybody, but essentially there's an arc to it that has to be done.
Mm-hmm.
And so you do need that book knowledge and that theoretical knowledge. It for me, and I think I've noticed this with thousands of students, is like the school of hard knocks of just like doing it and figuring it out. It can work, but it elongates your time frame to such a point where you either may run out of money, you may run out of willpower or the will to do it.
Mm.
Your psychology could change in terms of like if you get beaten down so much, it at points will create all sorts of weird habits and phobias and fears, right? Because like you had to do it a certain way. And it's like I got beat down, but I learned a lesson. I took a note and I did it my way. Well, guess what? At some point, like those things are ingrained into your psychology,
Yeah.
and it shows up in your trading. That's why I always tell my students, like, you only get your first time to do your first time. Like, yeah, you may blow up an account, but like if you're doing it in a way where you're making progress, and maybe one slipped away from you or right something happened, which one can always slip away,
Sure.
then those are things that can happen. But if there were some good things inside there when you blow up your account, okay, we can learn from that and go on. But yeah, if you're just going in and saying like I'm gonna do this my way, man, that's tough. Like for myself, like as a business person, I got 10 employees. I got in this business, and I have multiple businesses. Like I don't know anything about business. I'm a trader. So I have business coaches.
Yeah.
Because I've made every mistake possible in business. It could be from tax issues to law issues to marketing things and so on and so forth. The shortcut of it was actually talking to somebody that knows what they're doing. Now, it doesn't have to be somebody you necessarily pay, but it does have to be somebody that is doing what you want to do, And, with social media and stuff like that, like you can find people that are like-minded, and they don't have to you don't have to buy a class necessarily, but you do have to talk to somebody that knows what they're doing. And that's beyond like, hey, some guy that's an avatar posting on Twitter. Like that's not necessarily it. I'm talking about like real mentorship, that give and take of you being able to get answers, but also somebody holding you accountable to what you're actually doing. And I think that's a really important, because those are the things that I've noticed like mentally happens to a lot of traders. Like, man, when you're trading alone or doing your own thing, sometimes you're willing to YOLO something. But when you're accountable and like for example, like, all my students, like they use Trader View or Trader Sync or some type of journal, Evernote, whatever.
Mm-hmm.
But when they know somebody's going to look at it and not their teacher, for me, they pay me, right? So like they know like, okay, yeah, Kunal knows I'm going to screw up. But like when you share it with a peer, man, nobody likes looking stupid in front of their friends. Like no matter what, like, okay, you can look stupid in front of your teacher. You don't want to look stupid in front of your friends. So there's that aspect of things, like find like-minded people and share, right? Learn from them, but share. That goes a long way.
Goes a really long way. And I think you hit on a lot of important points. I mean, Accountability is an interesting one. I really like that angle, and I think it is something that traders could really benefit from.
Yeah.
And even obviously it helps to have a group of other traders that you can just that
Sure.
understand you and get you. But even if you just have a significant other or a friend that can keep you accountable or just keep you on track from YOLOing something or doing something that you're going to regret, that can go a really long way. So I like that a lot.
One of
Yeah.
my best students, he's an Indian guy. Indian guys are like the most, they're like the smartest people for like certain things. But when they get into trading, it's like pure degeneration. Like all Indian traders, man, they're like gamblers. And it took me a long time to figure out. My guess is because our parents are like so strict, like I have really strict parents too, we
Mm-hmm.
are never allowed to do anything.
Mm.
And they're probably married, they're never allowed to do anything. So when it comes to this trading, it is like YOLO, 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 YOLO. And I'm like, I'll talk to one of my students. I got one of my students, Samir, and I'm like, dude, you work so hard. You get like 4 Subway shops. And I'm like, and then you're YOLOing all these trades.
Right.
And he's like, dude, you don't know what I go through. Right? And it just happens like that.
Yeah.
But the accountability is really important. He's like, when I talked to him, I said, because he was really, really, he had elite mental skills and also discipline skills. Like he's a hard worker, good dad, right? So on and so forth. This is all takes discipline. Be a good dad takes discipline. Be a hard worker, show up every day takes discipline. But like he was letting 1 or 2 slip away every week, right? That just mentality of like, I got to get this big home run.
Yeah.
So the same thing. I said, you know what? Because I met his wife before and she's a ball breaker. So I said, you know what? Share your P&L with your wife every single day at lunch though. Because, like where a lot of people make their mishaps is like the midday trading.
Yeah.
Morning is hot, midday is not, end of day, sometimes it's a go, right? Sometimes a hoe. Like that's just the way it goes. So I said, share your P&L with your wife at midday because that'll get him stopping the trade because he always makes money in the morning. And as soon as he started doing that, right, the accountability of like, oh man,
yeah,
I'm going to share this with my wife.
Yeah.
I'm going to walk away with my profit. So every day now, like he just walks away and he makes actually less money than he was before, but he's not having the once a month crater that was just like this impact on his psyche. Now it's like, okay, instead of trading 8 hours a day and having like 2 just heinous losses, he's trading 2 hours a day and he makes almost the same money, but a lot less stress.
Sounds a lot healthier to me. That's a good trade in my eyes. So
it is. It takes a long time to learn. I still battle with it every day.
Well, so yeah, I definitely want to explore this a little bit more. But before we go too deep there, give me sort of the elevator pitch of your trading style. What is your approach to trading the markets nowadays?
So I keep things pretty simple. So no matter what, there's a tried and true things of the market. And there's fads of like small caps this. Remember, there's like a hot fad of shorting small caps, right? And then there's like a hot fad of longing small caps and this and that. And there's so many of them. But the tried and true components of the market has always been number one, trends. And then number 2 is like catalysts, right? Post earnings announcement drift, essentially, right? Like stocks that have some type of catalyst. And when you can couple that with some type of chart breakout, these are stocks that can continue on for weeks to months, if not longer. Like, for example, if like anybody is watching like Roblox right now, like Roblox, right, had earnings out a couple weeks ago and, it gapped up maybe into the $100 range or give or take that. It was sitting at $80 forever and it gapped up and, that day it pushed. But subsequently, right, even after earnings, so the earnings day, like it opened up at 95. I'm looking at a chart right now. Got to 110 that day, right? So you have chart breakout plus catalyst. Very important. And then you're coupling that with it's a recent IPO. But there's always a post-earnings drift in a healthy market. So you have that catalyst. So like, that thing, even though the earnings day, it was only at 95, right? It got to 140 something today, right? So you have that post earnings drift. The second part is just, momentum in general. Like as a trend trader, I try not to counter trend too much unless it's just a unique opportunity. Like for example, like today, right? Like a lot of the tech stocks rolled over. So that's a macro picture
Yeah.
that is a little bit different than just, pure chart technical analysis, via specific stock. So in general, like those are the different ways I'm going to play things like trends, catalysts, and then of course macro plays. Like today, like when the market gapped up and it being Turkey week, like that was like to me like not an obvious short, but that's a high probability short for the most time, because you're already like, if you look at the Nasdaq, right, like it had been up 5-6 days in a row, and they had one rest day, a few days, 5 days ago or so. You gap up today, like that's usually people see gap ups and they think buy, because that's like, everybody's using their trade idea scanners and they see gap up and they're taught to buy. But like on a macro level, right, that's usually a sell signal traditionally. So like those are different ways I'm going about these things. So it's trends, catalysts, and then of course macro plays. When the market is showing something specific, you were taking a big picture play. And then beyond that, I'm doing cryptocurrencies and things like that. But those are all basically the same tactics I'm using as stock trading.
Got it. So time frame and like swing trading versus day trading, you're doing pretty much everything. It all boils down to trend, momentum, and everything, right? So the beauty is you can do it on all time frames, and that's pretty much what you're doing.
So a majority of my trades are on the day trade side, and that's obvious because when you're day trading, you might take 100 or 200 executions in a day if you're trading with size and scaling in and out. So swing trading is like, I'll take 2 or 3 good swing trades every couple of weeks, but only when the market itself is trending and market breadth is showing certain characteristics where I have a high probability of actually making money. What I mean by that is you got to go beyond just indexes, right? Like the index is like, for example, if you use the QQQ, well, the QQQ is 100 stocks. Well, if you look at like market breadth of the last X amount of days, and we don't have a screen share here, but I've built out on TC 2000, right? Like a market breadth page. And so I tracked 4 things. First thing I track is percentage of stocks over the 200-day moving average. Why is that? Well, the 200-day moving average is like your longer term picture on the stock, right? That's a 1-year average, essentially, 200 business days. Now, like right now, we're at 44% of stocks over the 200-day moving average. That is, to me, not like an intensely strong market, because if you're at all-time highs, your 200-day moving average should be on the bottom, right? Out of all your moving averages, if you use them, it should be on the dead bottom. So the fact that a majority of stocks are actually under it is a red flag. Then I use a T2108 indicator because that's just the most famous one on T2000, right? That's your percentage stocks above its 40 PMA. But I just look at that as like a 50-day moving average. That's also been declining, right, for the last 10 days. So like right now you're seeing, even though the market has been going up, your market breadth has been slowly degenerating for the last, I would say, about 8 days, give or take, 10 days.
Yep.
So those are things that you have to track. Also track percentage of breakouts versus breakdowns. So 4% breakouts versus 4% breakdowns. So like, for example, today, even though, the NASDAQ, it wasn't like a murderous day on the SPY, finished down like 0.2% or give or take, but the QQQs got nailed. There were 707 4% breakdowns. So those are significant moves. It's not like, okay, advanced versus decliners is like, okay, I have a stock that's down 1 penny or up 1 penny. So you have a skewed data point. 4% for me as a day trader, like I want to be in stocks that can move, right? 4, 5, 6, 7%. So 4% is a good spot. So 707 to 197 up. Previous day was at 331, 117 up on the 4%. So like, even though the market was flying the last couple of days, the market breadth has changed. The previous day before that, 640 4% breakdowns, only 123 4% breakouts, even though the market was up that day. So what it's telling you is that underneath the hood of the market,
right,
there's something happening. So the indexes were essentially masked by the action in Apple and a handful of stocks.
Got
So
it.
like that might be something where I'm not looking to do any swing trades in beyond just some selective ones if it just looks picture perfect, because like the wind is not at my back there. Now, day trading is like an interesting thing because in swing trading, you have to have a big picture of everything.
Hmm.
When you're swing trading, it's not just indexes, price action of individual stocks, right? And then the macro pictures of data and things that are happening like market breadth. And I'm purely technical trader, but I do pay attention to news and kind of the effect of it. But when you're day trading, none of that really matters. Like whatever the market is showing, the market is showing. Like you can, like today, like, okay, you're thinking this is a short on the indexes, you can narrow it down. And if that doesn't show, you can reverse really quickly. Because the difference between day trading and swing trading, at least in terms of success, there's two aspects of success in them. When you are day trading, your, what would be the terminology? The amount of trades you take allows you to smooth out your results. Meaning, like, okay, if you take, say, 10 trades in a month as a swing trader, well, depending on what the market's doing or whatever, your sample size is so small. So, like, 1 month your results may stink.
Right.
One month your results may be amazing. And then 1 month, like, they may just be super through the roof. And that can happen. There's just markets where you should be swing trading a lot because market gaps up every day, stocks gap up every day, right? The day traders are chasing it, but the swing traders are making money overnight. And that encompasses probably about maybe 2 or 3 months, maybe 4 months of the market every single year. But when you're day trading, the sample size is different. Like you might be taking 10, 20, 30 trades a day. So the outliers are not there. Like I've had terrible months swing trading this year, especially in a couple of like the choppy months.
Sure.
Like between September to October. I was trying to swing trade in the beginning of September, and then like it was kind of became obvious, like, okay, no matter what I do, like this is not going to work. And then we've had other periods in the market like that. In day trading, it doesn't really matter because you can be long in the morning and then short and so on and so forth. So I primarily I make more trades just in the day trade because it fits what I'm trying to do, but it also allows me the sample size to smooth out my results.
I mean, what I like about the way you approach the day trading side is that you are marrying the technicals with a catalyst. A catalyst is something that seems to be very important in your eyes. So my guess is you're curating your day trading list of stocks based on, like you, I think actually even mentioned, the earnings, if they reported earnings or if they, I don't know, CEO is getting replaced, or an actual major story is the fuel that you need to see to make sure that stock is in play. Is that kind of how you're approaching your day trading watch list?
So like when I make a day trading list, I usually have baskets.
Mm-hmm.
All right. And so I call them tiers, right? So you got 3 baskets or 3 tiers. Your tier one is like, okay, you have stocks that have catalysts out right now or catalysts out recently. Those stocks are going to move independent to what the market is showing. Meaning, if Roblox or Airbnb or whatever is like a recent kind of earnings winner, and there's been quite a few, Goose Island, or there's been so many. This has been a good kind of market for earnings lately. I'm just kind of bringing up a list over here. Well, those stocks are going to do what they're going to do because they have a fundamental catalyst. So they have something that's like a push.
Yep.
And so whether the market is down, and we're not in like that period of the market where you're getting crashy days, right? Like today, like it seemed like the end of the world, but really like the SPY was down 0.2%, IWM was down 0.3%, the QQQs were down 1%. Like that's not really, right? Theoretically, like that's not really like the end of the world kind of thing. It's not really anything. It doesn't actually have an indication of anything. So like when you have days like that, these stocks that have catalysts, earnings breakouts, hot chart pattern plus earnings breakout, like those are going to do what they're going to do. They're going to cruise no matter what's happening in the market, like and it can be from the most unexpected things. Like I had a big rip on, this PLBY the other day. And like this is like a classic, like this is not even like a well-known stock, right? But you have like a chart breakout. They had a big earnings beat. Like that's going to be something, whether the market's up or down, like that particular day, like it's going to cruise no matter what. Its volume is going to be not linked to what's happening in the market. Its order flow is not going to be linked to what's happening in the overall market, because that specific day, everybody is reacting to what's happening in the news of that particular name. And you still have to use the technicals to do it, because there's been a lot of stocks that have, right, like great earnings, so you would think, and then they tank that day, and vice versa. I've seen that happen a couple times, like Etsy or something. Like Etsy a couple weeks ago, it had its earnings out, it spiked down like the first candle, and they completely reversed and popped like 50 points that day, right? So you can only put so much into reading the earnings, because we're not, right? Like, well, we don't work at Goldman Sachs. Like,
Right.
I don't have a MBA from Wharton. And I'll tell you what, like most MBAs from Wharton, they can read the earnings, right? They're not going to be able to predict the stock price regardless.
Yeah.
And so like that's like the catch-22 of it all. You can be so good at reading the news, but like you may not be able to pair them together, So that's like a catch-22. So those catalysts are going to be really important, especially as we get like into this market where we're getting more and more extended. The breadth changes and it narrows, where like if you don't have a catalyst, then we have a narrowing of the market right now, where like really it's like 10 stocks that are leading the market. And then every other stock is essentially kind of like in the dumper, minus your pump and dumps from Discord and stuff like that. And you'll always have those. There'll always be a kid with pimples and a Rolex, using Thinkorswim and claims he makes $2 million from 1,000. But beyond those things, you need the catalyst in certain markets. But in hot markets, they actually goose it so much more.
I really appreciate that. I feel like I used to do more day trading back in the day. And ultimately, I mean, it wasn't for me.
What happened?
Oh, man, what happened? Well, so I'll tell you what happened. But it reminds me. So one of the things I think I was missing back in the day was the catalyst side.
Sure.
I had the technicals lined up. I did my homework. I knew the chart patterns I was looking for, and I was ready to trade those the next morning. But without that fuel, without that urgency, I mean, hell, if everyone's looking at $40 price breakout and it gets
Sure.
up there and you're trying to play for the breakout, but there's not enough, sauce, sizzle, oomph to get through, that can be a painful way to sort of trade. I think that was one of the key things I was missing. So I wish I had you 10 years ago.
If you think about it like this, like for anybody that's listening, you can't, and if you just think about this like in common sense way, if you think you can draw a squiggly line on a chart and make a shitload of money, then you are mistaken. You can at times draw a squiggly line on a chart and get a quick trade or something along that end. But you could get a 2%, 3% or something along that end. So, the technical analysis, supply and demand has always a place. But if you want to get like a 10%, 20%, 30%, whatever it is, right? You need something pushing it beyond just, hey, I drew a squiggly line on a chart. Now, it doesn't matter if you understand what's pushing it, as long as there is something pushing it. Because the price action in the end dictates it, but the catalyst helps.
I love it. I mean, it makes all the sense in the world. And so you asked me what happened on why I didn't day trade.
I always ask everybody.
Oh yeah. So this is something I want to talk to you about, because I mean, my story or my evolution of when I was day trading, which I think is pretty darn common, but basically, I would go on a nice run of a week or two
Sure.
weeks, 3 weeks. Life is great. Day trading's awesome. Putting in 3 hours a day and making paychecks. This is fine. And then it was that 1 week every 2 or 3 months where all hell just, came loose, and I gave back 5 weeks worth of gains in one horrible mental spiral where I would just self-destruct. I mean, that was basically it.
Sure.
And so, when I think about day traders now and I think about this time frame, I mean, it is all about managing yourself
Sure.
and basically just trying to, the way I like to think of it is, because day trading, you have so much leverage at your fingertips. You can trade, you can do all these things, and especially when things aren't going well, there are lots of buttons you can push to make it even worse, right? When really you should be walking away, but it's hard. So I guess, in your world, right? Let's say you start off the day, you take a swing at a stock and you get stopped out. That's life. That happens, right? You take another swing, you get
Sure.
stopped out. What's the self-talk there? And how do you not spiral out of control? And we did talk about accountability, and that I know is probably a big part. What else can you tell us?
It goes two ways. So number one is still accountability.
Mm-hmm.
Like for me personally, like I'm trading in front of, right, so many people. I'm
Yep.
live. I got my TC2000 on, my broker's up. Like I'm trading in front of people. Like, I can't be just YOLOing things, right? Like there's a responsibility there. No home runs, essentially. If it shows, it shows. But there's a responsibility there as people, right? Like just not beyond them as customers. I mean, these are people, right? That
Sure.
hopes, dreams, right? Expectations, they're all involved in there. So if I'm wrong, I'm wrong. Now, if they weren't there, I do think I would degenerate into some of this kind of behavior. But I do give myself a little bit of access, a little bit of leeway. So, like, usually, like, if I lose on my first three trades, and it's rare, but that can happen. I guessed the market wrong. My watch list just wasn't right. It's going to happen every blue moon. I'll reduce my size immediately. So I'll tell my guys even in the chat room, half sizes for the next 2 hours. If I hit on my next two or three, all right, we're back at full size. I got my mojo back, essentially. But essentially what you want to be doing is like, and that's where people make the mistake is most people, when they start to lose, they increase their size.
Right.
What you really need to be doing is as you lose, you need to be decreasing your size.
Yeah.
Because it could just be a mathematical fluctuation. First of all, like if you have a 60% win rate, for example, there's a good shot you can lose on your first two or three trades. It's
Sure.
just a mathematical anomaly that could happen. But now in the heat of the moment, you're not thinking mathematical anomaly, right? Like, even though mentally I know that, I just will cut my size right away. Because I also have the inherent belief, because I've studied so much, learned so much, and I've prepared for this day, that over the course of the day, I'm going to make my way back. Because, like, as day traders, you have really an infinite number of opportunities every day. Not infinite, but right? Like, there are numerous of them. So I lose on three trades. Okay, I got to cut it back. Even if it's really hot, I got to cut it back for two or three because I don't want it to slip away. Because once you get into 4, 5, 6 losses, I mean, at that point, you're really asking yourself to go for 10, 11, 12. When you're
Right.
not trading well, you can lose on anything.
Yeah.
And what usually happens, there'll be a stock that's just stuck in range, and you just buy it at the top of the range, sell at the bottom of the range, buy at the top of the range, sell at the bottom of the range, because the market's not doing what you thought it was going to do. So then you get stuck in that. And if you're truly a degenerate, which I've been majority of my life, not only will you buy at the top of the range and sell at the bottom of the range, but you might short the bottom of the range, cover the top of the range, buy the top of range. So now your losses are compounding in ways that you can never even believe. My 3 or 4 biggest loss days have all been from, I had just a small loss in the morning, and then I got stuck in a stock that was in a range. I was like trying to break it out. It's like I buy the breakout, selling the bottom of the range, buying the breakout, selling the top of the range, and then when you really get desperate, right, you're shorting it, and then covering the top, then buying the top, and now you're doubling your losses. And my 3 biggest losses all came from stocks that had really no movement.
It's hilarious. You look back at it and it just went nowhere.
You're just stepping up your size and you're doing that. And so I cut my size immediately if I have 3 losses in the morning. And if I even lose a couple more times, but I haven't hit kind of my max pain, I'll just keep reducing size till I kind of get my groove back. Once I get my groove back, then okay, I know. Like if I hit even one trade, I know, and it's a good trade, not just because I got lucky on something. But if I hit just like one good trade, I know, like in my head, here we go. The run could happen because, I've been on so many runs in my life. So if I could just hit one, but I got to get into the position where that one is available to me. And so that means you got to cut your risk. And then you may even have to like pass down on setups. You may see setups, but it may not be your go-to. So like when I'm in a slump, like, right, it's like, like when you're dating, you need a slump buster sometimes, right? Like you got a little bit of dry spell, whatever, you need a slump buster. And in trading, you also need slump buster. Like sometimes like you may be slumping and you're thinking, man, I want this. No. You got to trade what you do well. So you wait for it. And you may turn down other setups. But once you hit that slump buster, you're feeling pretty good. You made a calculated trade. It worked out well. Now it's game on, right? You can start pushing the chips in a little bit, not all the way to full size, right? But you step it up. By the end of the day, you may work your way back. The biggest mistake you can do, though, and this is where people screw up, they get a big loss, they work their way back to even, and then they go for one more as they want to hit their goals, and then it goes because they oversize. So once you get to like back to even or whatever, manage that also. Like don't be YOLOing anything because you may just go all the way back to zero. And that's been actually those have been the heartbreakers of my life. Like I've been down so much, I get back to even and I YOLO something, and it's like right back to where I started.
So do you think it is, I guess on some level it's necessary. Like, should you be looking at your P&L during the day? Like what's the pros and cons of that for day traders?
Yeah. So like a lot of people say like hide the P&L. And I also tell a lot of my students to hide the P&L. Like if it's like they're actively like staring at it. Mm-hmm. But like in the end, like if you have a 3rd grade aptitude, you have a basic understanding of what your P&L is. You may not be on the dot, right?
Right.
But like, okay, if you had 500 shares of something, you lost 2 points. Like, you kind of know you're down $1,000. Like, so the hiding the P&L is not going to necessarily fix the issue, but it can just get it out of your frame of mind, right? And so toss it if you need to toss it, because like even though sometimes like we put trading with like who we are as a person. If I'm a bad trader, I'm a bad person sometimes, at least in the heat of the moment. Yeah. So sometimes just hiding the P&L might make you just feel better about yourself, right? To say, you know what? Fresh, I'm going to go for this, so on and so forth. But like, in general, over time, I would be worried if you didn't know the math.
And we will be right back. Those of you who know Trade Risk know we are all about rules-based investing, and that's why we are so excited to have Investors Business Daily as a podcast sponsor. William O'Neill and the experts at IBD created a proprietary market timing system that keeps you on the right side of the action, aggressive in uptrends and protected in downtrends. IBD Digital members get daily updates on the current market trend, so they always know if it's a good time to be invested. Members also get access to IBD's top trade ideas, in-depth analysis, educational webinars, and much more. This is the framework for responsible investing, knowing when to be involved in the market and what stocks to have on your watch list. And with IBD Digital, you'll get both the information and education. Podcast listeners can get their first 2 months for only $20 by going to investors.com/Evan. That's investors.com/EVAN. Now, let's get back to today's show. So I do want to talk about crypto. Before we get there, one thing that I always hear you sort of reinforcing when you're doing your lessons or talking to subscribers is range. You need range out of stocks. So talk to me about range and how that factors into the names you're trading.
100%. So the biggest fallacy that happens with new traders is they think if I trade a cheaper stock, I'll make more money. So majority of cheaper stocks, especially if they don't have a catalyst, they might move like say 10 cents. And so that's a 5% range. Well, $100 stock, if it moves 5% up or down, right, is a $5 range. And now, like if you're really looking at the market right now, the pump that's going on, a lot of stocks have $10, $20, $30 ranges. So in the end, like you have to mentally kind of prepare yourself. But in reality, look, what's easier to do? Trading 10,000 shares of a $2 stock that may move up and down 10 cents here or there. How much of that are you going to get? So I always talk about the meat of the move, right? We want the meat of the move. What is the ATR on a stock, right? The average true range. So like if you're using T2000 or whatever, it's just called ATR or average true range. And then you could change around the time frame of days. So what's the ATR on the stock? So like ATR is 5%, 10%, but it's $2. It's hard to move around 10,000 shares. If your range is only 10, 20 cents, you're only going to get the meat of it anyways, right? And there's going to be slip ups and slippage and so on and so forth. But if you have a $100 stock, $50 stock, whatever it is, and it's got a $10 range, even if you have a small account, you have a $100 stock, you have a small account, and you say you got a $10,000 account, you got a $100 stock and moves around $10 up and down throughout the day. And you're playing the ebbs and flows. You might be long, you might be short, whatever it might be where the setups show. What's easier to make money on? Because the big thing with trading is like, okay, not getting one home run trade. Can I make money consistently and stack them? So if you're trading a $100 stock with $10 range, hey, even if you're trading 100 shares of it, if you can catch $3 here,
yeah,
$3 there, $1 here, because right, there's going to be an ebb and flow to it. Guess what? You might have you have a loss or here or there.
Sure.
You might make $500 on that thing. Trading 100 shares. That's something duplicatable. Because guess what? If you do that every day, it's $2,500 a week. 4 weeks in a month. It's $10,000 a month. Trading 100 shares of something. It seems like that can't be possible, but it's easier to do that than to sit there and look for the $2 stocks, $3 stocks, and get knifed all the time. And by the way, like in the small cap space, because of the advent of Discord rooms and the algos, for the first time in the last few years, algos are really into small caps, even as much as they are in large caps. You are seeing knifes all the time. What I mean by knife is like, you get like this picture perfect breakout and it goes, tss. I'm sure you guys saw this. Like I had a bunch of students and I was telling them nonstop, like, don't trade this, like yesterday, like, don't trade this GTAC. Like everybody's talking about this GTAC. If you look at the chart on GTAC yesterday, it's November 19th. Every time it looked hot, it goes poof, minus 20%. Then it ramped back up. It goes poof, 20%. And then it ramps back up. It goes poof, 20%. Okay, well, if you are a longtime trader, like a 20-year veteran, you might be smart enough to catch the knives, right? And know that this is such a liquidity trap for new traders. But like a majority of people are not going to know that. They're going to draw a squiggly line, say this is a breakout. Poof. I mean, I see 1, 2. I mean, I had like 4 20% knifes on it.
Yeah, that's a
But
gnarly
now
chart.
every Discord room, small cap room, your trade idea scanners, we're showing this nonstop. And you draw your line, you see your breakout. You might even get, before breakout, you might get it on the VWAP even. You still lose it. They're jumping under there.
Hmm.
So that becomes really, really important. So what's easier to trade? Something that's like $100, $50 is moves up and down $10. You only got to do 100 shares, and you'll see the patterns way more clear. And like over this last year, like Roblox has been one that I've been trading, for the last few weeks. But like before this, I would say before November, like I was trading this Affirm every day, AFRM, and the ATR on that according to TC is $14 right now. $14. It's $122 stock. $14. So 100 shares, 200 shares. Trading that back and forth. You have range. You have liquidity. They move cleaner too, because like you're gonna follow technical analysis better because the algos, the big players, they're all looking at the same moving averages and all this stuff. Yeah. So they move cleaner. Like you don't have to worry about a Discord room with 500,000 people putting a sell alert and knifing you, even though it looks like it's good, right? And so like now all of a sudden, 10 years ago, these low float names were really easy to trade because there was no liquidity in them, but the algos couldn't get into them. Like they didn't have enough volume. They had too much of a spread. But now they have so much liquidity because there's so many chat rooms running around that the algos are in those things. Yeah. And what's easier to fool? If you're an algo, what's easier to fool and make money? Your local $5 stock, $7 stock, right? People are trading from a free Discord room, or like a legitimate company with catalysts and so on and so forth. It's hard to mess with those. Now, there is a time and place for small caps. So, like, I'm not dogging on them. I'll trade them. If I see a hot one, I mean, don't get me wrong. I'll do it. I don't want to do it. I'll do it. But it has to be like the perfect storm of things.
Yeah, I love it. The small caps, $5 and under, penny stocks, man, that space has always scared me. That is the one thing I don't think I ever got sucked into as a trader, even starting out, was stay away from those. Even though, hey, you can get you can ride some nice waves occasionally, but it's dangerous territory.
They work till they don't work.
Yeah.
And then like you get used to a pattern or something like that, but man, they get knifed.
Yeah.
I mean, they get knifed. Like you just see 20% down candles out of nowhere. How do you plan for that?
Yeah. Yeah.
How do you plan for that? Like you're not going to see that in like, right, a regular company. But man, like if you think about like even like this year, like UPST, right? That thing went from like 100 to right like $400 or whatever, 300, $400.
Yeah.
Like that when that was trending and now, it's downtrending. Like when that was trending, like, man, you could trade 100, 200 shares of that.
Yep.
It was having $30 to $40 range every day for months. I memean, you can make your money. You can make your money. And you get more margin, like if you're like, thinking about like your accounts and stuff like that, you don't really get margin on small cap stocks anyways. But like, these kind of stocks, you get margin on them. And, I don't want to promote margin or whatever, but used in the right spot, in the right companies, if your risk is tight, margin is fantastic. Margin, leverage and time, business, stocks, it works if you do it right.
100%. Yeah, no, I love margin. I mean, used responsibly, it is, it's great. It is great. So let's switch gears. Let's talk about crypto. I think you love your crypto trading now, is my guess. So talk to me a little bit about that world. What are you up to there? Like, what are you looking for? Are you day trading, swing trading?
In cryptocurrency, I very rarely day trade.
Mm-hmm.
And cryptocurrency is an interesting industry because it's nascent still. And I opened, my cryptocurrency chat room probably 2017, 2018, give or take. So I've been at it for a few years, not like some of the Bitcoin originals, but the trading side of it, I might have been one of the first ones that was doing it. And it's still like, it's hard to day trade cryptocurrencies because Coinbase, Binance US, you don't have access to leverage. You can't long short.
Yep.
So cryptocurrency market, because it's a new market and it gets pumped and then dumped, you have crashes like twice a year where they just drop for a month or two. Then they go sideways for a month or two. So when you don't have access to the shorting, right, you can't play it the same way as stocks where you can count on it for daily income. Now, cryptocurrency, you can count on income, but you can't count on daily income. See, in the stock market, because no matter what the market does, whether it's up or down, you can change gears. If you're looking and reading your indexes right, you'll have an idea of what the market's going to do, and you have a good plan. So you can make money most days in the stock market, right? Like if you're a good trader, 4 out of 5 days a week, whatever ratios are there, depending on how much reward to risk you're getting. Cryptocurrency market is different. You could go months without making any money. Like you may just sit out. But then when it heats up, hot damn. When it heats up, there's just no better thing out there. Like I'm looking at these kind of crypto charts right now. There is every year, like there are just months where nothing goes on.
Yeah.
And then there are months like where it's like just gangbusters. And so I do more swing trading in cryptos, day trading in stocks, but I'll selectively, swing trade stock. But I think with cryptos, the percentage returns are higher. So you automatically think you should be day trading because like any given day, you'll see cryptocurrencies, like there's like 30, 40, 50% runners. But the thing is, it's a 24-hour market. So like in the stock market, you have, right? If you have a 30% runner, 40% runner, it'll move in a concentrated way. It could do it at the end of the day or beginning of the day, but like it's going to make a majority of its move like relatively quickly, maybe in an hour. In cryptocurrency, if it moves 10%, it might do it over the course of 24 hours. So like, the day trading of it can be a little bit hard because you're sitting there and it's like going up like 2 pennies every hour. And right. Like who could sit at the computer that long? Right. So I tend to swing trade more on the cryptos, mostly though, due to proper exchanges that have leverage. Now there are exchanges that have leverage, like Kraken has leverage, but they got a really shitty interface. You can use KuCoin, but it's a Chinese exchange. You're just wrought with risk there. I don't know if you can even keep more than 10, 20 grand there. Like I keep 20 and then they have leverage and stuff like there. But do you really want to keep, I've seen like BidDesk just went, exchanges get shut down all the time. There's no laws, right? If it's in Canada, they can just send out a notice on Twitter saying, hey, we're shutting down. Your money's gone.
Yeah.
Who are you going to talk to? Ghostbusters? Who are you going to talk to? So that's why, I keep about 20K in KuCoin because you do get all the leverage and futures and the toys. And then I'll just use the leverage that, make income. But I will put it out immediately.
Yeah.
You can't trust it.
Yeah, it is. It's very different. It's a whole different world. Obviously, like you said, the big thing is regulation on these exchanges. And there is none. For the most part. Obviously, Coinbase, they're regulated. They're New York. They're indoctrinated now. But
and Coinbase is tough too. Like if you ever go on Coinbase website or Pro, so if you look at Coinbase right now, they are worth more than a Ford Motor Company. Their Coinbase Pro, it looks like it's from the 80s.
Yep.
Like it is, is dot matrix, MS-DOS, dot matrix, maybe even worse. Like it is like, there's nothing you can really do on there except just hit some market orders and sell orders. Like, how are you an $80 billion company? You can't have I got some friends that are like, phone developer, like app developers. And I'm not saying they're the best or anything like that, but they can make it look better than that. Like, holy crap. Like, you have $80 billion. They raised, 10 or 15 in the private markets. What did they use the money in?
Yeah. Yep.
What did they use the money in? I don't know. So that's the one issue I have with the crypto market is like, you just don't have that epic apparatus. Like, you don't have it, Interactive Brokers or Thinkorswim or right, Trade Pro or whatever people use. You just don't have that software. You can just get used to it, and it can do everything you want to do. I don't know if you know this, but like me and my business partner, Eric, he's one of my employees, and we spent 3 months in Japan in 2017, 2018, just to learn about cryptocurrency.
Oh, nice.
I had an inkling that it was going to be hot, but in Japan, they're always like a step ahead. And I didn't know if they were a step ahead, but like, do you remember when we were kids? I'm 40 years old. But when we were kids, like, you had played Nintendo games, and like Japan always had like, you'd be playing like Super Mario 1, and then we were like Super Mario 8.
Yeah.
And like, you could play like River City Ransom. And it was like out in Japan like 2 years later. They always have everything a little bit earlier. Nice. So we went to Japan for quite some time to learn about cryptocurrency. And we were doing like some Shark Tank stuff, like investing in cryptocurrencies and learning about them. And it was really cool. It was like really eye-opening. But you still just don't have the apparatus of, and it's tough. But I would say my 5 biggest trades I've ever taken, they've all been cryptocurrency.
Yeah.
And it's all, and they've all been from luck. Like, you get a right pattern, right place, right time. And you wake up one day and you're like, oh shit, like, how did that happen? Yeah. That never happens in the stock market, and that's kind of the cool thing about being in like a newer industry. You have that aspect of volatility, range, everything. So cryptos is cool, but I don't think like it's something you could do full time to make daily income. Like, if you're like looking at like making trading as a job, you need daily income. I need daily income just to get the feedback loop.
Yeah.
Right. Like, that's one of the things, like full-time trading. My mentor, Paul, he's a full-time trader, but he swings. But dude, he has months where he's like demolished, right? Like, I don't know, like the feedback loop is not close enough for me. I need to know every day whether I did a good job or a bad job, whether I'm a good person or a bad person. And swing trading doesn't do that. And cryptocurrency is also a little bit tricky because you have those months where it's just a hibernation.
Yeah.
So it's hard to get the daily income. Now, for those of you guys that are like overseas or in Canada, you can make daily income from cryptocurrency because Binance, there's 1 million of these exchanges. They have leverage, shorting, longing. They have 3x ETFs. They have anything you can think of. But the US has come in and they've really limited like how many products we can trade on this. So we just don't have the tools yet, but it's coming.
Yeah. God, I hope it does. I hope it does quicker.
Are you trading these?
Oh yeah. I've been in this space for a long time. I don't really post or publish anything on it. I mean, so believe it or not, I started trading Bitcoin back in 2012, back on crazy exchanges with spreads wider. You could drive a truck through them. And I mean, it was wild. And most of those exchanges don't exist anymore. And obviously I wish I just bought and held instead of being a trader, but it's in my blood to, manage risk and, back in the very active days. So for me, what I've mostly been doing is holding for the most part and managing once or twice a year, trying to avoid the big washout 50, 60, 70% drops, but really just trying to be more of a trend follower for the most part, like in the long-term sense. Mostly because, like you said, they don't have the tools. The tools are the big things. There's no good way to short, to hedge, and there's no good way to get crypto money to stock money easily. It's like I have to wait and, go to a stable coin, then wait 5 days for a transfer, then get it over to IBKR. Like, it's a pain in the neck. And so, and then the exchange risk. So I basically am like, all right, I'm going to just kind of sit tight and, you know, wait for some of these things. But yeah, it's been fun. It's interesting. And yeah, the decentralized exchanges are pretty fun. I don't know if you've played around on those yet.
Yeah, I've been done Uniswap, the
Yeah.
pancake swaps, and all
Yep.
these. The problem with all of them is just the gas fees.
Yeah. Spreads and fees.
So my thinking has been, because you can transfer coins really easily now. It used to
Yes.
not be the case. So crypto.com, Binance, Coinbase, Binance US, Kraken. I keep accounts at all of them. So if there's a coin between all of them, you'll have a coin. If you're looking at a coin, it's not at one, it'll be at one of the others. I mean, you could send some Solana right now. I mean, Solana will show up in like 30 seconds. Yeah, it's not going to be anything, So that's going to be the easiest way, I think, to do it, because the gas fees are nuts right now.
Yeah, they're crazy. All the NFTs and everything else that's going on.
For those guys that don't know, gas fees are essentially the cost of doing transaction on Ethereum blockchain, which is the blockchain that has the most transactions or the most usability. So Bitcoin is essentially used, right, to transfer money and things of that nature. But Ethereum is like a multi-purpose blockchain. So people are using it for almost everything. So it could be for transferring currency. You want to send money from one person to another, but also a majority of NFTs, anything that you can think of, dApps, they're happening on the Ethereum blockchain, but the Ethereum blockchain is, number one, very slow. And then there's very high costs of using it. I sold out of all my Ethereum blockchain NFTs, and I've moved to the Solana because I feel like there's like a little bit of an edge there. Their NFTs are starting to mint. You can mint them really cheap.
Yeah.
And people are catching on to the platform. If you look at like Etherscan or whatever, or any of the block explorers, the amount of users that are powering on, so I track that every day.
Yeah.
The amount of users that are powering on the Solana platform are increased by quite a bit every day. I'm thinking, and it's a bet, right? I'm a man that makes bets, essentially.
Yeah.
So it's a bet, essentially, that, you know what, Solana is going to pick up some of this. At some point, somebody big in the NFT space, there's going to be groups of them that move to Solana. But Solana's already got a lot of NFT stuff anyways. Yep. You sign up to like one Discord room and they start spamming you with like 1,000 other ones. Buy this board cat, buy this board ape, buy this board astronaut, buy this, right? Like, all right, cool.
Yeah, it is. Solana's interesting. Tezos is another one that's picking up steam on like the NFT side because it's just so much cheaper.
You know what? And I was doing a little bit of that.
Yeah.
My problem with Tezos, just that damn coin just trades like shit.
Yeah, it just can't get any traction. Yeah. Yeah. So nice. Before we wrap up, we're about to wrap up, but before we do, on the crypto side, sounds like you're pretty much willing to go anywhere in that space then, right? To trade and to find if you see opportunity, you're hunting it out and you're going for it, right? In terms of all the different types of layer ones or anything else.
So guys, in terms of any type of trading, investing, being flexible mind, flexible in terms of what you're willing to believe is true, is really important. Like, you cannot be dogmatic, especially considering most of us, I should say, don't really have like a specific expertise into engineering, or like if you're in the stock market, right, fundamental analysis or whatever it is. You can't be dogmatic and say like, this is it, this is me, this is who I am, this thing is right, this thing is wrong, this thing is worth something. You can't assign these kind of values to things that really we don't have the pay grade and the education to really do. And then, by the way, the people that have the pay grade and the education to do it, they still can't guesstimate price. They can guesstimate whether something works or not works, but they don't guesstimate price. And so you can't be dogmatic. Always, like one of the things that's kept me going in my trading career has always been a flexibility of mindset, but also like what I'm willing to learn. You know, I know like from 2008, I have a strategy that works for me, but I'm always sitting there tweaking things, trying to learn things. I see people, it could be from Twitter or whatever, people I talk to, even my own students, they teach me things. Like I got into crypto space from one of my students. He was he worked at a damn car wash. He paid all this money to buy my stock trading boot camp. He was trading my stock trading boot camp. And he's like, I don't have that much capital, so I don't want to day trade stocks. So this is like 2017, so I put in the crypto market, and he was trading the crypto market using the stuff I was doing. And he's like, dude, he's like, big bro, like, dude, I made this killing. And I'm like, huh? I thought you worked at a fucking car wash. And he's like, yeah, I did. And, like that's like that flexibility. And I was like, nah, it's a scam. Like, what's Bitcoin? Just invisible, right? This is 2017. It's invisible. It's nothing. And he's like, dude, send me a snapshot of some of the stuff. And I'm like, damn it. That's my strategy. Like, and it's right. You have to be flexible to say, you know what? I was wrong about this. Because I was downing it. I was like, you know what? This, like, what is a fake coin? Like, fake money? Like, whatever, right? And so you got to be flexible. But then it's like the same thing in the stock market. You've got to be just flexible with not your discipline, but like in what you really think can work. Like let the evidence show, because there's tried and true things always, catalysts, chart breakouts, coupled together, macro things, but there's still that nuances in them of how you treat them. You've got to be flexible. And if any of you guys are thinking about getting into trading, like you have to have, number one, a systematic approach of like what you do, but you can never be dogmatic in that what you do is the best.
Well said, Kunal. This was awesome. Where can people find you if they want to stay on to date with everything you're doing and all the work, crypto trading, day trading? Where should they go?
Bulls on Wall Street, the Bull.
Bulls on Wall Street.
You always find me Bulls on Wall Street or Kunal00 on the Twitter.
Well, we'll link them all up in the show notes. That's it, folks. So all those notes will be in this episode. You can find it at thetraderisk.com/podcast. Thanks for tuning in. Hope to see you in a future episode. This was a lot of fun, Kunal. Knew it would be. Thanks so much for being here.
My man.
Thank you for listening to Smarter Trading. I hope you enjoyed this week's episode. For all of the show notes, links, and callouts, head on over to thetraderisk.com/podcast. If you enjoyed this episode, please leave us a rating and review on iTunes. Smarter Trading is hosted by me, Evan Medeiros, and produced by Ashton Alexander. Thanks for tuning in, and we hope to see you in the next episode.